Hello guys, today I'm going to talk about trading with the candlesticks. Having to knowing how to trade with the candlestick patterns like the bullish engulfing, the bearish engulfing, and that's what we're going to major in for today. Okay, and I took my entry around this level. Okay, you can see the buy entry. Purely using um supply and demand here. So that was why I placed my entry here. So what was the reason behind this entry? If you look carefully, just by this first shadow zone, this is a demand zone, rally, base, rally, rally, base, rally. So this is a demand zone. So when price came at first to this region, I did not, or you wouldn't just buy, you wouldn't just place your buy here. The first thing you want to do, you want to look for a QM pattern from the 5 minutes time frame. Now, if we would go back to the 1 minute time frame, we can see that we have a demand zone here. If we would go down to the 30 minutes time frame, we can see this um price rejection, this pin bar here. You can see the powerful price rejection. So when the price went up all the way and came back to this region, we know that this is a very powerful buy zone because of the rejection by the side here. So when you go down to the 15 minutes time frame, we can clearly see that the price made what we call a bullish engulfing, or we can call this a dominant break buy. Three candle, one, two, three. Three green candle, three bullish candle, covering one bearish candle. So when the price went and returned back to this region, the buy was even more legit, and the price pushed upward. And you can see this candle here that cover this other candle. So this is what we call a bullish engulfing. So when the price came back here, the price bought. So our CP would be somewhere around this level, because why we have what we call a QM pattern here. If you put on the line charts, now we have from today we have what we call from this point higher high and our lower low. So now the price will come to this region. So these are left shoulder, our head. So we'll be expecting our right shoulder. So when the price would come to this region, the price would break. The price would sell for some time or possibly sell for a long time. But I've come to it's wise for you to scalp at this point. Sometimes it sells and go all the way down, but at this point it would have been wise if one would have just scalped, because at this downside we can see that we have a demand zone here, a rally base rally, and just by the left we have SBR. SBR, it means support becomes resistance. Now this resistance will become support, and we have this demand zone. So that's why the price still went all the way up buying, and it broke this supply zone after the initial reaction. Now there's something we have to understand here. I took my buy because of the demand zone here, and I didn't just go to buy. You want to wait for some confirmation sign. So what was my confirmation sign here? There was a dominant break buy, where three bullish candle engulfed one bearish candle, and the price made um a buy zone here. That's called a rally base rally. And if we'd go to the 5 minutes time frame, on the 5 minutes time frame, let's put on the line chart. We can clearly see our QM pattern here. This is what we call higher high and our lower low. So our entry should be from this left shoulder to the head. So that was the another reason for the buy entry being valid. I want to draw my trend line. Sometimes when some of you draw your trend line, okay, something like this. Now we have our trend line here, the upper trend down the line. You make sure that it touch all of the wicks. Well, you would have been expecting a sell here. Um, expecting that the market would sell and go to the downside and break it to the downside. Well, it wouldn't have been wrong, but there's something we have to understand here. If you are trading, sometimes you have to factor in fundamental analysis. It would have been unwise for you to expect the price to sell and go all the way downwards. Yeah, it wouldn't have been possible. It wouldn't have been possible because if you factor in your fundamental analysis, you would know that, or you'd put into consideration that for a time this is the crypto market and there's a possibility of this flag here not working. When the fundamental analysis step in, it sometimes makes void technical analysis. Sometimes it makes void technical analysis. For this case here, we can see that we have a pennant, like the cobra. After it takes his neck down and we just shoot going upward. So that was when the price has consolidated in this pennant and came to this demand zone here. It reacted and broke going upwards. And I knew that the price would continue going upward. It will not go down. It will not start selling. It will go upward for some time before without matter seeing some change in character and the price selling. Guys, let's talk about the bullish engulfing channel. About the bullish engulfing candlestick pattern. Please, guys, remember to subscribe, like the video, and you click your notification bell so as to get my videos. And the link is on this video for you to join my Telegram group. We are giving some insights, and we'll also go through some markets, and I'll also be giving signals for trading here. Now, right here, we have what we call a bullish engulfing channel. Sorry, a bullish, I'm always saying channel. We have a bullish engulfing candle. Now, if you look at this shadow zone here, you can see, um, you can see the this green candle that's engulfed the black candle. So that's why it's called the bullish engulfing. And the price reacts very well because this is a buy tone. And if we go to the 5 minutes time frame here, we can see that we have a flag here. So remember, when in our trend line, they must have two or more touches, and they must touch the wicks and not cutting across the body of the of the candlestick. Now, so the other flag here, when the price came all the way down, remember we have a bullish engulfing. Even on the 5 minutes time frame, you can see this bullish engulfing candlestick, this green candle engulfing this bearish candle. So our TP would be somewhere around this level. Although it broke the TP and continued going up and up and up, on and on. You see, the reason I would make this zone at TP is because just by the level, you can see that this is a very powerful support and resistance zone. The price has be going to this zone for some time, and this is what we call S and arrow, support and resistance zone. And if you look carefully, it's sometimes also called SBR, support becomes resistance. So this has been the zone that has been given support, and when it broke, it became a resistance zone, and the price went all the way down there and got into this bullish engulfing, made a chart pattern called flag, and the price finally broke out to the upside. After which, the price came back again. But it would not be wise to place an entry here, to place your buy here. Reasons being that it's not so clear. It's not so clear. There's a possibility of the price breaking downwards again, what we would want to do is that we would want to wait for a confirmation sign, such as a demand zone. A demand zone, because if you look here, we have our demand zone here. You see, there's something we also have to take note of. But the demand zone becomes very, 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 very powerful. It becomes very, very, very powerful when there is a demand and supply zone, and just the at the left we have support and resistance. So that was why when the price came back here, you can see that the price bought for some time, came all the way downwards, and this demand zone here was the reason why the price pushed upward. It's like went bullish in a very ballistic manner. You can see the big candle all going up, on and on and on. Okay. Now the bullish engulfing candles, they signal that the buying strength is much, and they are more powerful when they are used in conjunction with trend lines and chart patterns. And even when you're on the higher time frame, oh my god, just like where some people they combine food to eat, like sometimes like beans with rice, and we have bread with tea. Sometimes they are not, sometimes that's how they work. It's very, 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 very nice. Now, in fact, this is how we go. First of all, when you open your trading view, your meta 5, you look for the demand zone. At this junction, we have a demand zone here. So at this zone, we have our demand zone, and this is also called a bullish engulfing candle. Why? Look at, we have this green candle. One, two, three, four. In fact, this is a dominant break by. This is a dominant break by. Yeah, you can see that this vertical line I had placed here, these candles here, one, two, three, four. A dominant break by is the region where three or more candle breaks covers one bearish candle. So this bullish candles this bullish candle they cover this other bearish candle. That was like, even when the price came back again, the price still went up, buying on and on and on. So you can see that it bought when going up, 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 up. Okay. And we our take profits would be this next resistance zone. This next resistance zone. And if you look at this zone, this chart that plays out here, we have almost like a wedge. Can we call it a wedge? Yes, you can see. Okay, if you ask, I'm mean, if we go to the higher time frame, this guy will probably look like a fake cut. Anyway, we can see that when the price came to this zone, the price but given it gave us an opportunity to hop in, and it went all the way up to this top zone. So after which it broke the zone and it continued buying. It continued buying. And we also have another one here. Now, I've told you guys before, and I'll say this again. Every zone has or better still, the price, there are things that move the price. The market moves as a result of supply and demand. It's impossible for the market to move if there is no buying and selling. That's very basic, and that we all know. Now, these are the zones you must take note of. These zones here, they are called they are called our buy zones. Now, here we have what called rally base rally, a green candle, a black candle, and another green candle. When the price consolidated and moved to this shadow zone again, if we are it reacted and bought. And you see, these regions are very powerful. Why? Because just by the side, you can see that the price have been resisting. The price came here because of this resistance here, and the price came down. After which the price went up again and did a little bit of supply and demand, and the price went all the way up and came down. It was consolidating, and finally it came back here again for the price continued buying. Now, see, there's something you have to take note of here. The confirmation, in fact, if you look carefully, these zones, this buy zone is very, very powerful. Why? Because it's not just a buy zone. At the left here, we have at this junction here, we have support zone. So remember when I told you guys that it's called SBR, support becomes resistance. And here we have this resistance zone here becoming a support zone. So that was why when the price came back here, the price had to buy. Number one, there's a supply and demand zone here. Number two, we have our resistance zone here. So it is important for the price just to continue going up, on and on and on. The price reacted and bought. And if you look again, it's not, bro. I love the chart patterns. Well, I don't know what you'd say. You might feel as though that they don't work, or they are just there to cause confusion in the market. But for me, I've been trading. I've been working with this guy. This is just how I trade, and I found them very so much reliable. Can you see how beautiful the chart is? So clear, so beautiful. Like, oh my god, so beautiful. Now you can see that. Okay, just imagine the risk to the reward ratio here. Just imagine the risk to the reward ratio. Also, also nothing to have been now. Our stop loss would be somewhere around this region. Take profits. We use the nearest support and resistance zone, or the nearest supply and demand zone for this. But ideally, we would use the support and the resistance zone. So when the price came down, it didn't even take the stop loss of the early buyers here. There was no manipulation. Just read it beautifully, and it continued buying and going upward. And if you observe at this data, we have a demand zone here, a demand zone, and I've told you guys that these zones, yeah, this zone is not just a normal zone. It's very, 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 very powerful. Let me turn on the line chart. Let me put on the line chart. So if I put on my line chart, you can see that this is not just like every supply and demand zone. It's a powerful one because of the support becoming resistance becoming support. So it's a very, 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 very powerful zone for us to make our entry, to put our entry. And you know, you'd have to spend time with the chart. You'd have to work with the chart. You'd have to always spend time with the chart to become good at trading good in this space. Nobody's a superman. I'm a superman trader. That's not true. Nobody's a superman, and nobody's a superman, and also no strategy is 100% accurate. Sometimes there might be losses, but it's it's not just the ability for you to predict the market and have the market going where you want it to go. It's your ability to manage risks and having a balanced psychology. That's what really matters. And this is a 15 minutes time frame. You can see that this demand zone here, and how the demand zone was able to give the price the much needed strength to continue buying. Just by the left and the demand zone, we have a very strong support and resistance zone there. Now, we want to place or take our entry at this level. Stop loss just bring a little bit downwards around here, this level here. And I'll take profit. We'll put it on the next zone here. Okay, so you say this zone. This will be our take profits. Okay, yeah, that's gonna be our take profits. Yeah, that will be our take profits. Why would it be our take profit? So this is support. This is strong support and resistance. And let me turn on the line chart. Now we feel that we have a Kosomondo cell here. Kosomondo cell. What's my call head and shoulder pattern? You can see. So we have our higher high. Okay. Then um higher high. We have our our lower low. let me do it again for that side, not to confuse some persons. Okay, we have a higher high, okay, then um our lower low, and so we'd be expecting to take our entry from this left shoulder. This is the left shoulder. This is the head. So we are expecting to take our entry from the right shoulder that we are expecting to form, or the head. In fact, we still have another one even inside again. This, this level like this region like this. We have okay, higher high, okay, and lower low. So that was that when the price came to this region, the price reacted and sold for a while. When the price came to this point, it went down. That was like the price just went down and consolidated, and after the consolidation, it broke going upward. The BTC market has been on a bullish sentiment, and for beginners, it will not be wise to place uh okay, it will not be wise for beginners to place entries like sale. It's not be wise. It's not be wise at all, because the market being on this sentiment it is now, looking for a sell opportunity would be dangerous. Rather, you want to look for an opportunity where you can place your buy, Doing so would make you be on a very good ground, on a very, very, very good ground, on a very good ground. Because if you just imagine placing sell, this kind of powerful bullish markets, you'd end up blowing your accounts. There's no magician here, there's no magic. Everything works by mm, you know, by technical analysis, fundamental analysis, and the wisdom that the Lord Jesus Christ gives, the wisdom that God gives. That's what makes people excel in this space. That's why people excel. Now, there's a book I want to recommend for you to read. That book, I can remember my early days. I read that book over and over and over and over again, because I gave my time to this, and knowing that I just have to spend time with the market. It's a book written by I don't know the author. I can't tell the name of the author, but it's called Trading Bible. It's a very maybe you might have heard about the book, and you've never for once tried to get the book. Just try and get that book. It's going to help your trading journey a lot. Okay, now in this space, or in this place, we have a bullish engulfing candle here. A bullish engulfing candle. Okay, if that's why the price, when the price came, the price bought. In fact, the price did not even break the region. You can see the powerful bullish movement that occurred. And never ever the price has ever since that the price has still been in buying, powerful buying a very, very, very powerful bullish sentiment. Okay, well, for me, the risks to the reward ratio, or the demand zone, is just way too big here. So let's go to the 30 minutes time frame. And on the 30 minutes time frame, okay, what I would have done here on the 30 minutes time frame, um, thank you, Jesus. If you look to the left, we have, okay, let me turn on my lens so that you have nothing to say. Now, we have, okay, yeah, higher high, okay, and we have lower low. So where is going to be our entry? Our entry first, we are looking for the right head. It's going to be from this level, or somewhere from the left shoulder, or to the head. So that's where we want to be looking for. That's where we want to fix our entry, around that level. The Cosmondo pattern, or the QML, or head and shoulder, we don't just use them alone. We use them in conjunction with other confluences to place our entry. Using them just the way they are, I don't find it so wise. I don't find it so wise. It's not so wise. Okay, now we have a pattern here, and it looks like a, let's see what we got here. Okay, like a falling wedge, the falling wedge. Okay. Yeah. Remember, when we are drawing our trend line, we are looking for um are looking for two or more touches. The more touches it has, the more stronger it is. We are looking for two or more touches. Okay, and now here we are. So okay, when the price came, remember that this we still have um our our Kosumono pattern here, and we have our bullish engulfing candlestick. So that was that when the price came, it was or it is impossible for the price to just you know just buy or no just sell. The current pattern helps a lot here, and the price that I told you would rise to the nearest support and resistance level. And at least where the I strongly advise working with a risk to reward ratio of about 1 to 2 or 1 to 3. That's better. I think something like when you well it depends on your traded strategy though. But for me, I would prefer going with 1 to 1, 1 to 2, or 1 to 3. If you take 10 trades, if you trade with the patterns, you add them to supply and demand zone, to support and resistance zone. If you take 10 trades, if at all you want to have losses and I mean, if you are spending time in the market, your losses, at least if you take in risk management, having a good balance psychology, at maximum you have about 3 losses. In 10 trades, you have three. Sometimes it's just 10 over and sometimes 8. So you see why it's very, very, very high. I see it very, very nice trading with the patterns, with the chart patterns. And you might see be just you just have to take this sentiment off your mind that this guy they don't work. They are just there to just trap traders, blah 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 blah. No, 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 that's not true. No, that's not true. The patterns, they work so well, and they work very well when you use them in conjunction with supply and demand. Don't just use them the way they are. If you use them the way they are, they may they may okay, they may not work. They may not work. You have to combine them. You have to combine them. Sometimes trading just with the chart patterns, just the way they are, it's okay. But I prefer trading them with supply and demand. I found that if I trade them with supply and demand, the win rate is higher. The win rate is higher. You saw the video or the analysis I was doing on the 95. I trade most times with the chart patterns. Sometimes I just trade with supply and demand. Reasons being that it also work. It also work. It also work. You need to know as well that there is no Superman, as I've said, and there's no magic here. No magic can help you here. God is the giver of wisdom, and you have a part to pay. You have a part to pay. You have a part to pay, and that is the part of studying the patterns and how they work. Right here, we have what we call a bullish engulfing candle, and we can also call it a rally based rally. Why is it a rally based rally? This is why. Okay, we have like rally base rally, and we can see this green candle covering this black candle. Yeah, where this blue um dots is. So that was when the price came to that region. The price bought and went all up, 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 up. As you'd practice, pay time to these guys, you would become very, 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 very nice. Spend time with these guys. These guys, they are good. It works. Like, it works. It works. But you have to spend time with this guy. They work. So you have to spend time with them. Remember, you can join my you can join my Telegram channel to receive tips, signals, and please like the video, subscribe, and please, 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 please share this video